I'm Danielle Fagese, contributing editor with American Banker. I'm joined by Srini from Tata Consultancy Services. We have a lot to talk about today, mainly how banks and financial institutions are helping move the country forward as we live in the new reality of today. Srini, thanks for joining.
Thanks, Daniel. It's a pleasure to be with you today.
So let's get right into this. What do you think the role of banks will be in the revival of the economies?
I think the banks have a very vital role to play in the revival of the economy. As we moved into this pandemic, banks have been very well capitalized thanks to the global financial crisis that they have gone through. And they are very well positioned to actually help rest of the industries recover in these tough times from the problems that they have. And actually, the governments across the globe have recognized that and have actually used banks as the conduit for distributing the funds, for example, for the small and medium enterprises, which are very badly impacted by the pandemic. However, the stability of the financial system and the good positioning of the banks today, while it can lead to economic revival globally, the banks will have to embrace a new paradigm to be ready for the future. That's what we call as the resilient banks leading the way for the global economic revival. This is based on three fundamental principles. One is the banks will have to rethink their strategies of products versus client segments versus the markets. Second, they will have to understand that the boundaries across industries are blurring today, and the value actually lies at the intersection of industries, and ecosystems will have a significant role to play in enhancing the value of a bank in the future. And third, banks will have to reimagine the customer journeys, and we will have to focus on how do you enable the purpose of the customer journey. In fulfilling that purpose lies the success of the bank. I think that's the way forward, Daniel.
Srini, how will the banks ensure that they are resilient?
Banks will have to adopt three tenets to remain resilient forever. The first is to be resilient at the core. Banks have demonstrated this very significantly in the recent past, but they also have to ensure that from a business paradigm perspective, they have business resilience built into their construct. That comes from two dimensions. One is actually being resilient from a capital adequacy and things like that, and the other is from an operations perspective, being resilient towards client connects through the channels that they have for the clients, and also being resilient towards the partner ecosystem through a very strong API ecosystem that they need to build. This has to be complemented with a digital first approach in client connect, and what we call as contactless client experiences is very important to reimagine the digital engagement for the realities of the new world in a socially distanced context. That would require you to reimagine, for example, the branch networks and how the people will interact with the branch personnel once they visit the branches. And it also has to be contextualized to remote work because the bank's teams themselves are today distributed over multiple places, and the workplace reimagination has to happen for the banks significantly. The third dimension actually is to be adaptive in their distribution networks. While direct to client channels have been adopted by most of the banks, advisors and relationship managers have a lot of value to offer, and I think their systems also have to be reimagined for the new realities, Daniel.
So that brings up my next question. How can the banks adapt?
Adaptability actually comes from twin tenets of adopting a cognitive enterprise and moving towards autonomous business. A cognitive enterprise would leverage significant volumes of data that the bank has at its disposal and generate insights which will enrich the client experience, and it will also enrich the business processing and its effectiveness, and it will lead towards higher levels of automation of business processes. So, for example, if you have better insights Underwriting of a loan book would become much efficient. If you have better insights, surveillance of trading or other functions in the back will become more efficient. And even in processes like trade finance, which are highly having manual intervention, implementation of automation and insights will lead to a much more straight through processing. So essentially, the banks will move towards a construct where most of the processing becomes human independent. And you could possibly use what we call as a digital twin construct to accomplish this in a gradual fashion.
So with resiliency and adaptability there, what about remaining purpose-driven? How can banks do that?
Very good question, Daniel. Actually, purpose driven nature of the banks is the most important thing for the future because the value in the future will lie at the intersection of ecosystems, intersection of industries enabled by ecosystem play. So, therefore, new reality products which the banks will have to imagine will have to leverage purpose driven ecosystems which will deliver additional value to the new products that get reimagined using the ecosystem concept. So it would mean that the purpose of the customer's journey in which a bank is being utilized, for example, for a payment transaction, gets more focus for fulfillment from an end to end basis. And that's where the promise lies for banks to go beyond the banking value spaces into the real purpose for which banking is done today.
That sounds great. Srini, thank you so much for sharing your insights with us today.
Thanks, Daniel. It was a pleasure to be with you today.
And thank you everyone for joining.